Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Hong Kong tech stocks surge on AI optimism. That's as the rest of the world catches its breath. All eyes, of course, focused on the upcoming Fed decision. US tech giants, meanwhile, including Microsoft and OpenAI, pledge investments worth tens of billions of dollars here in the UK as they join President Trump on his second state visit. Plus, Oracle shares spike after it's named as part of the consortium that would acquire TikTok's US operations. Happy Wednesday. So it is Fed day. 25 basis points appears to be locked in for traders. There is, of course, an outside chance that you get a bigger cut than expected from the Federal Reserve. The guidance going forward, the language from Jay Powell, watch for potential dissenters as well. Bond traders pricing in increasingly bets that there will be a 50 basis point cut, at least at some point this year. Those bets have been increasing. US stocks pausing the rally yesterday. European stocks falling around 1% by the end of the close. There will be a bit of a sense of waiting on the sidelines before you get that decision. And what we hear from Jay Powell later tonight, of course. European stock futures pointing to gains of 0.3%, so repairing some of the damage that came through yesterday. FTSE 100 futures looking to add 11 points. S&P futures stateside then after modest losses yesterday. Currently flat. Nasdaq 100 futures as well in similar territory. Let's flip the board and look cross-asset. The euro seeing strength yesterday at a 4-year high versus the US dollar, crossing above 118. And many FX watchers now see 120 in sight, particularly on the back of expectations you get a further weakness in the dollar. 118 right now on the single currency, a little softer by 0.1%. The 10-year, of course, in focus. Will that cross below 4% on that Fed decision? Let's see, 402 right now on the benchmark. Brent at $68 a barrel, a little softer on oil, down 0.2%. And spot gold still near those record highs, closing in on 3,700, but down in the session today, just 0.2%, influenced, of course, around expectations around Fed cuts for the yellow metal. Let's cross over to Asia right now. What a day over in Hong Kong, particularly with Chinese-listed companies there focused on AI. Our Asia equities reporter, Winnie Su, with a gauge in terms of the AI story, the momentum that's playing out, particularly in Hong Kong. Winnie.
Yeah, there is so much optimism around AI in China right now. But when you take a step back and look at just how overall Asia has been today, it's flattish, maybe slightly marginally positive ahead of the big Fed decision that we're going to expect later today. And remember, we're really coming back off this big rally that we're seeing in Asia with the gauge closed at record high yesterday. So it's not that surprising if we're seeing a bit of a pullback and profit taking with investors with their eyes on the Fed outlook here, and if the Fed is going to continue to cut going forward. So overall, that flattish session in Asia as well as rest of the world as well. And let's take a look at what's going on in Japan. Here we saw the strongest demand when it comes to the 20-year JGB bond auction, and that really is a relief for markets because there has been so much concern around the appetite for the bond market in Japan because of the uncertainty around politics and also the fiscal expansion that might likely happen with the potential new PM to come. So right now, again, all eyes on the decision with the central bank on Friday. And for now, we're expecting no cuts, no rate hikes from the Bank of Japan, especially with the political uncertainty still weighing on the markets. Now, take a look at China. Just now, we talked about that AI optimism. HS Tech is actually at its highest since 2021. And here we're looking at tech stocks rising, especially with Baidu here rising more than 15-16%. And that's on the back of an analyst raising its rating to buy from sell, talking about the growth potential of its in-house chip business. And actually another highlight here is SMIC, and it's talking about testing with China's very first domestically made chip making equipment. So lots of excitement news here in Asia today.
Yeah, a number of significant catalysts for the AI story, for the tech story over in China. As you say, Bloomberg's Asia Equities reporter, thank you very much indeed with that update. Winnie Su, thank you. Staying on tech, Microsoft, OpenAI and other American companies have announced plans to spend tens of billions of dollars on technology infrastructure here in the UK. They are part, of course, of a series of business deals that coincide with President Donald Trump's visit to the country, which officially begins this morning. As he left Washington, President Trump said the UK was hoping to make deals over tariffs and trade.
They want to see if they can refine the trade deal a little bit. We made a deal, and it's a great deal. And I'm into helping them. Our country is doing very well. We've never done this well. We're having trillions of dollars coming because of the tariffs. And they'd like to see if they could get a little bit better deal. So we'll talk to them.
Let's bring in Lizzie Burden, who is in Windsor for us. Lizzie, the US, the UK putting a lot of focus, of course, on the deal-making activity. There will be the pomp and ceremony, but there will also be some significant deals signed, it seems.
Yeah, I'm looking forward to all of the pomp and pageantry, Tom. Welcome to Windsor, by the way. You've got this 11th century fortress behind me, and this isn't the usual venue for a state visit. You'll remember the last time President Trump came, it was at Buckingham Palace, but this is a unprecedented second state visit for President Trump. And as you say, at the heart of this visit, at least for Prime Minister Keir Starmer, is business. That $10 billion worth of economic deals expected to be agreed by President Trump, including on defence tech cooperation and nuclear partnership. As you say, the likes of OpenAI's Sam Altman and Nvidia's Jensen Huang will be flanking the president on this visit. You've had Microsoft talking about $30 billion of investment here in the UK. Google, £5 billion in artificial intelligence is expected to commit. But look, it's not great news for every sector. And indeed, the Financial Times reporting that there could be closer cooperation when it comes to digital assets. But there is an ocean, literally, between the regulatory frameworks of the US and the UK, notably the UK even lagging behind the European Union. So it's easy to put money on the table. Let's see what happens after that when it comes to making the most of that investment.
And Lizzie, you hinted at the fact that there are some sectors that may not benefit as some within those industries had expected, and steel seems to be front and centre. What is going on? Why is the UK unable to convince the US to reduce tariffs on steel?
You're absolutely right, and there's an expectations management exercise going on here. It appears that Keir Starmer has accepted 25% tariffs on steel exports for now as the price of certainty for businesses, even if it's a blow. It's less than the 50% tariffs that other countries' steel exports will be facing, so you could argue that that gives a competitive advantage. But the Conservative opposition says, why did Keir Starmer tout 0% tariffs on steel exports before he'd got that guaranteed over the line from President Donald Trump? They're also managing expectations when it comes to tariffs on Scotch whisky, for example. But, you know, there is a lot on the table here. Starmer is going to have to tread very, very carefully. And Donald Trump knows that Starmer is not politically strong right now. His friend, Nigel Farage, the leader of Reform UK, is beating Starmer in the polls. Starmer has lost 3 from his government in just the past 2 weeks, not least the US ambassador, the UK's ambassador to Washington, Peter Mandelson, over his ties to Jeffrey Epstein. And that could make for some painful small talk, some awkward questions at the press conference as well. So in order to get all of this investment over the line, to get any of that room to negotiate that President Trump was just talking about, Starmer is going to have to tread incredibly carefully.
OK, UK correspondent Lizzie Burden with some of the deal-making, but also some of the political risks for the UK Prime Minister on the back of this visit that we continue to monitor. Of course, Lizzie covering that for us throughout the day. Lizzie, thank you. Now, Bloomberg understands that Oracle and Silver Lake are among the companies that will acquire TikTok's US operations under the deal that's been agreed between American and Chinese officials. Let's get more details from Bloomberg Intelligence senior analyst Rob Lee. Rob, what do we know then about the shape of this deal?
OK, so these are unconfirmed reports that broadly mirror prior agreements, again, which were unconfirmed ahead of the US imposition of tariffs on basically most countries worldwide. So just running through it in brief detail. Under this potential agreement, a new company will be created and a new app will be created in the US. ByteDance, which is the owner of TikTok, the Chinese owner of TikTok, would take a 20% stake in that company. And in theory, that would satisfy the requirements on Chinese ownership. And then thirdly, the algorithm would be licensed in from China, which would give the American operators and owners of the US TikTok business control of what content goes on it. So again, this is all unconfirmed at the moment. I guess it comes on the back of the talks there have been between senior officials from the US and China in Madrid last week, and also comes ahead of a planned call between President Xi and President Trump on Friday. Just very last thing, very briefly, I think the real risk is, whilst progress is obviously being made, I think there's a real risk that we'll see a further delay on proceedings and that this saga could actually go on to next year, because the process of separating these two businesses is immensely complex, tied up with geopolitics, and also the physical separation of the two businesses is an immensely difficult task. So progress is being made, but it's probably not the end of the road for this ongoing saga.
Well, I think that's really important context as we look at that delay once again. Another 90 days, the fourth time, I believe, for US President Trump, of course, in terms of TikTok and the stay of execution until December. But as you suggest, maybe that gets pushed even further and possibly into 2026. Look, Rob, you're sitting in Hong Kong. What a day for Chinese tech companies listed in Hong Kong at the highest level since, 2021? A lot of AI optimism. What's going on? What are we hearing, whether it comes to SMIC or Baidu or what's happening with Alibaba?
Okay, well, I think you've got a bit of a flavour of me. I like to, stick to the fundamentals, and I don't want to rain on the parade. But I think there's a big divergence between sentiment and the real ebullience and enthusiasm there is in the markets. Bear in mind that most of the markets in Asia have a very high retail contingent. We're heading towards a big holiday in China, the Mid-Autumn Festival, which is coming up next month. So I think there's a very local element. And again, based on our strategists, they've published details on the real level of ebullience and over-exuberance there is on that side. But then there's the fundamentals. So not picking on any companies, but we've seen Alibaba estimates and Baidu estimates in particular downgraded significantly this year. Both companies' earnings are going to decline this year. So if you're buying into these stocks, you've got to have a high degree of certainty that the earnings are going to turn around into next year. And the point I keep coming back to time and time again, both of these companies are beginning to monetize their AI businesses, and that's really what's driving the sentiment. But the level of monetization coming through is nowhere near to justify the very, very heavy levels of capex they're putting in. And I think we've got this divergence between the sentiment, stock price, performance, and the fundamentals does concern me.
OK, Rob Lee. Somewhat raining on the parade of those AI stocks and tech stocks over in Hong Kong, listed in Hong Kong. Senior analyst at Bloomberg Intelligence with the analysis and insights. Rob, thank you very much indeed for breaking that all down for us with some lines, of course, in the context around TikTok. So the Federal Reserve, widely expected, of course, to cut interest rates by a quarter point today after jobs data suggested the labour market in the US is faltering. This is the kind of day that Valerie Teitel lives for. Val, what do we... Look, this is one of the most highly anticipated Fed meetings that I can remember for months, possibly years, and it's not really the anticipation around whether or not they cut, but everything else around it.
It is going to be a very hotly watched decision coming at 7 p.m. UK time later today. The Fed widely expected to cut interest rates for the first time this year, but you're right, Tom, the drama really isn't about the cutting. It's what's going on behind the scenes. Will we see dissents in the decision today? Well, could we even see a three-way dissent? The more hawkish members voting to hold rates and the more dovish members like the likes of Governor Chris Waller voting for a jumbo 50 basis point rate cut. That'll be extremely interesting to see right out of the gates at 7 p.m. Also, keep an eye on the dot plot. This is their projection of interest rates for the years ahead. Market will be hotly watching whether they pencil in three cuts for the remainder of this year and three next year. That's what the market is assuming when it comes to the Fed's pricing of their terminal rate. Also, watch out for what Powell says in the press conference. Will he give any guidance on the pace of rate cuts to come. Will he signal that the next meeting in October is a done deal when it comes to continuing their pace of rate cuts? That'll also be of high interest to the market. He could also, in some hawkish manner, just remind the market that inflation is still a worry of theirs and they will proceed cautiously. Those are the kind of dynamic the market is set up today. However, if you look at what we've priced in, we have priced in such a dovish shift from the Fed today. It's really hard to see how they're going to beat this. If you look at the implied terminal rate in Fed funds futures over the next year and a bit out to the end of 2026, the market is already pricing in 150 basis points of rate cuts between today and the end of next year. So that is quite a high bar for a dovish shift when it comes to what could be relayed in the dot plot today. Now, this kind of dovish shift, Tom, has kept Treasury yields near year-to-date lows. That 10-year yield just above 4%. It's also kept the dollar on a steady back foot, and we're actually eyeing year-to-date lows and maybe a new, fresh 4-year low for the Bloomberg Dollar Index ahead of this decision.
OK, Bloomberg's Fernando Tantel with a great setup ahead of the Fed, of course. Watch the dot plot, the guidance, of course, and any dissent as well. Val, thank you. Here's what else to think about today. 7 a.m. UK time then. Inflation data for the UK. We're expected a headline print of around 3.8%. The core will be in focus, as will services, at a time when investors and traders are increasingly expecting the BOE to be on hold. At 7 p.m. UK time, it is the big one. It's the Fed rate decision. We'll be across all of that for you, of course. And later in the day, President Trump attending that state banquet with the king and members of the royal family. Coming up, Israeli forces begin an expanded ground operation into the heart of Gaza City. Plus, later in the programme, I will be joined by Investec's Ellie Henderson. We're going to look ahead to the Fed. We'll break down the UK labour data as well, what to expect ahead of CPI, what it all means for the BOE and that rate decision on Thursday. Stay with us for that analysis. This is Bloomberg. Israel has started a long-threatened push into Gaza City after weeks of airstrikes and incursions into its outskirts. An Israeli military spokesman says operations will continue until Hamas is defeated and hostages freed. The offensive comes as a UN-commissioned report concludes Israel is committing genocide against Palestinians in Gaza. The report calls on the international community to push to end the war and punish those responsible. Let's bring in Bloomberg's Jumana Pasecci with the latest. And let's start with that offensive, Jumana. What is the latest in terms of Israel's moves into Gaza City? And did the Secretary of State of the US essentially give the green light to Netanyahu for doing this?
Well, Israel are framing this as an expanded ground operation. Remember that multiple airstrikes had been conducted against high-rise buildings in Gaza City and on the outskirts in the run-up to yesterday. But they have now started entering into the city. It is believed, per the IDF, that around 3,000 Hamas combatants still operate within Gaza City. But then they also say that it could take several months to take full control of the city. About 1 million residents were residing there. IDF say that around 350,000, 400,000 Palestinians have now been displaced. And indeed, we saw images yesterday of many of those Palestinians trying to flee away from the center to go to the relative safety of some of those coastal cities. But you did mention the Secretary of State Marco Rubio's visit to Israel. And in a press statement and in a press conference alongside the Israeli Prime Minister on Monday, he did say that the U.S., their preferred negotiated end to the war would be the means of outcome that they're looking to achieve. But in the absence of that, it may ultimately require a concise military operation to eliminate Hamas. So those were the words of the U.S. Secretary of State Marco Rubio. And of course, many other governments around the world, including Arab governments and European governments, have warned that this will just lead to more bloodshed. The UK Foreign Secretary saying that the offensive is utterly reckless and appalling, saying that it would bring more bloodshed and kill more innocent civilians and endanger the remaining hostages, of which 20 are thought to still be alive.
Yeah, pointed criticism from the UK Foreign Secretary. At a time, of course, Jemana, when we did get that UN-commissioned report and the findings were that Israel is committing genocide against the Palestinians. What underpinned that analysis?
Very damning report. This was a committee that was commissioned by the United Nations to look into the campaign that Israel has waged against Gaza since October 7, since the Hamas attack on Israel on October the 7th. And their findings conclude that Israel has committed genocide on 4 out of the 5 pillars as defined by the Genocide Convention that was put in place after the Holocaust. And just to give you some of the exact wording that was in that 72-page report, those include the killing and deliberately inflicting conditions of life calculated to destroy Palestinians, as well as imposing measures intended to prevent births within the group. So very damning assessment put forward by this UN commission, but at the same time, Israel were very quick to fight back and say that they dispute both the methodology and the results of the findings, saying that it was a distorted and a false report, that the findings were based on Hamas falsehoods. Now, the chair of the commission, Navi Pillay, has called for countries to fulfill their obligations under international law to end the war and punish those responsible. I should just add that the findings are not binding to the UN, but they could be used in the other case that was taken up by South Africa. You will recall towards December 2023 when they put up a case of the ICC claiming that Israel had conducted genocide. They may use the findings of this report in the ongoing case there.
A very important update from our Bloomberg Horizons Middle East and Africa anchor, of course, Jemana Besechi. Jemana, thank you with the details and the context around that. Coming up, the Trump administration continuing its push to fire Fed Governor Lisa Kirk. The details are next. This is Bloomberg. Now to some other stories making the news this Wednesday. The man accused of killing Charlie Kirk has appeared in court, charged with first-degree aggravated murder. Prosecutors say they intend to seek the death penalty for Tyler Robinson. Kirk, who was a conservative activist, was shot dead while speaking at an event in Utah last week. And the man accused of killing the healthcare executive Brian Thompson will not be charged with first-degree murder after a judge ruled that prosecutors had failed to show he committed an act of terrorism. Instead, Luigi Mangione could face a second-degree murder charge and 8 other counts. Brian Thompson was shot dead last year outside a hotel in New York where he was due to speak at a United Health event. And Bloomberg understands that the White House is planning to ask the Supreme Court to allow President Trump to fire Fed Governor Lisa Kirk. That's after an appeals court blocked her immediate removal, allowing her to take part in the Fed's meeting, which began yesterday. Kirk is suing the president after he tried to sack her over allegations of mortgage fraud, which she denies. And US safety regulators are looking into whether Tesla's electric door handles are faulty. It follows a Bloomberg News investigation which found that people had died or been injured after getting trapped when Tesla's lost power. Regulators have received more than 140 complaints since 2018 relating to Tesla doors getting stuck or malfunctioning. Coming up, UK inflation data due at 7 a.m. London time. We dig into what to expect, what it means for interest rates with Investec's Ellie Henderson. That analysis coming up. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The euro hovers near a 4-year high against the dollar, with investors focused on a potential rate cut at today's Fed meeting. US tech giants, including Microsoft and OpenAI, pledge investments worth tens of billions of dollars here in the UK as they join President Trump on his second state visit. Plus, Oracle shares spike after it's named as part of the consortium that would acquire TikTok's US operations. Let's get a check on the markets then. The focus, of course, drawn, the gravitational pull of the Federal Reserve. It's not so much whether or not they cut today, it's the forward guidance, it's the dot plot, it's to what extent you see dissenters on either side of the question around the weakness in the jobs market, but risks around inflation. European stock futures pointed to gains of 0.3% after losing a little over 1% across the benchmark Stock 600 yesterday. The FTSE 100 here in the UK pointing higher by 0.1%. We had inflation data dropping at 7 a.m. UK time, of course, and we'll unpack the story for you on that shortly. S&P futures just a little softer, down 0.1% after moderating yesterday, ending the day slightly lower yesterday. Nasdaq 100 futures also off by around 13 points. You would expect there will be many traders sitting on the sidelines until they get more of a steer from Jay Powell and the Fed. Let's flip the board and look cross-asset. What a day for Chinese-listed tech stocks over in Hong Kong. The HS Tech Index up, as you can see, 4%, reviving, of course, the optimism around the AI trades in China. Baidu in focus, SMIC, some upgrades, some updates in terms of chip and AI evolution and innovation coming through in China, and that is spurring those significant gains at almost 4-year highs right now. The US 10-year in focus, of course, 4.02. Do we cross below 4%? On what Jay Powell has to say, we'll watch the Treasury curve on that story. Euro dollar at 118. You saw the strength of the single currency. Today, a little softer by 0.1%, but you're almost at that 4-year high for the euro. And gold, still close to record highs, but a little softer in the session by 0.2%. So all eyes, of course, firmly on that rate decision by the Federal Reserve. Let's get more on what to expect and bring back in Bloomberg's Valerie Taitel. Valerie, just walk through. You set out so nicely at the start of the show in terms of what to watch. Where is your focus going to be? Where is the risk in terms of the uncertainty around this decision and the guidance?
Well, for me, it's all about whether the Fed today can match the dovish pricing that's gone into the front end in the last few days. That dot plot better show a very decent move downwards based on what the market is pricing. But Fed, it doesn't just stop at the dot plot there, Tom. Also watch out for these dissents. Just how much is the disagreement at the Federal Reserve? Could we have a 3-way dissent today with the more dovish members wanting a 50 basis point rate reduction and the more hawkish members still warning about inflation, saying they are uncomfortable cutting rates at this point in time? The dot plot will also be an interesting one, of course, but also watch out for the guidance. Is Jerome Powell in the press conference going to make it sound like October is almost a done deal, that this rate cutting cycle is going to extend beyond today and maybe extend into next year? Just how exact is he on how aggressive this rate cutting cycle could be? Because the flip side, I think the risk to the market is he still is warning on inflation and says that it's going to keep the Fed cautious as they continue to move rates lower. But when it comes to what the market is pricing in, we are pricing in 150 basis points of rate reductions between today and the end of next year, taking the terminal rate just south of 3%. This is important, Tom, because the Fed and the market in some way is expecting to hear from Jerome Powell that they are considering needing to move rates below neutral. No one really knows where neutral is, but the market is clearly thinking it's somewhere south of 3% in order to aid the labor market. Now, this move in the front end, this move lower in the market pricing of the terminal rate has kept those Treasury yields anchored for now, those 10-year yields hovering around 4%, hovering around the year-to-date lows. It's also kept the dollar on a back foot. Watch out, we might break out to a new fresh 3-year low when it comes to the Bloomberg dollar spot index. Remember, a lot of the aggressive move lower was earlier this year on the back of tariffs, but the new fresh dive for the U.S. dollar could be on a more dovish than expected shift today.
OK, Bloomberg's Valerie Taitel, another great setup of what to watch for when it comes to this Fed meeting and decision and the guidance. Thank you, Val. Just some breaking news before we get more analysis in terms of these central banks and the inflation story in the UK. Verisure seeking to raise about 3.1 billion euros in a Stockholm IPO. This is a home security and surveillance company. Verisure is, I'm told, how to pronounce this company's name. Verisure. It makes more sense, doesn't it? So looking to list in Stockholm. We knew that was going to happen. They're looking to raise 3.1 billion euros. So that is the update. That's the redhead across the Bloomberg terminal. So the IPO markets, the capital markets warming up, it seems, in Europe. We'll keep across that story for you. Let's get back to the CPI story and the Fed story and get some analysis out and bring in Ellie Henderson, economist at Investec. Ellie, thank you for joining us bright and early around the set once again. Let's start with the Fed before we get on to the UK. We're seeing bond traders now putting in place options trades around a potential 50 basis point cut from this Fed. If not today, then at some point before the end of the year. Does that make sense to you? Do they go big at some point this year?
Our base case for today is a 25 basis point reduction from the Fed, but a 50 basis point cut certainly isn't out of the realm of possibilities. What committee members are really weighing up is the balance of risks. You've got higher inflation risks on the inflation side, and you've got downside risks to the employment mandate. But we think Powell will try and gain a consensus on the committee that a 25 basis point cut is needed for now. He'll sell it to the hawks maybe as an insurance cut against a deterioration in the labour market. But it's certainly possible that you see some members, maybe Waller, Bowman, Stephen Myron, the new governor, go for a larger 50 basis point cut.
Yeah, the kind of uber dubs on the committee right now. To Valerie Teitel's point, she's watching whether or not Jay Powell confirms market pricing going forward. Do you think that will be what Jay Powell does, or you think he leans into the hawks, does a cut, and then is cautious on the outlook?
I think he'll try to sit on the fence a little bit, and that's purely because we haven't seen much of an inflation impact yet from tariffs in the hard data, but that's not necessarily to say it's not to come. We're still seeing a lot of goods that are in bonded warehouses, so they're not paying the tariffs on them yet. And I think a good example is in the clothing sector, that we're still kind of in that summer clothing that was imported into the US before tariffs hit. Once we hit winter sales, we wonder whether price rises will be more evident. And because of that, we think Powell will maybe want to hedge his bets, go with a smaller cut today, try and convince his fellow members, and then possibly hint to more cuts later on, but not overcommit to large interest rate reductions.
I'm trying to understand the market pricing into 2026, where you get below 4% by July. In fact, you've got 130 basis points of cuts priced in by July of next year. And how markets then are squaring that with the risks around a second wave of inflation. Are they looking through that risk? Is inflation risk derailing market pricing on this Fed?
Well, I suppose you can look at it from the fact that we also have a loosening labour market, and that in itself means that second-round inflation risks are less likely. But I think there is still a great debate among economists, among markets, about whether the tariffs will cause a one-off inflation increase or it is longer lasting. But for now, policy is still restrictive. It depends what happens when we get closer. But of course, there's also this elephant in the room that there are other voices that are also weighing in and giving their input.
Let's focus on the UK then. What do you expect to see when it comes to inflation data out of the UK? And when does the BOE manage to break the back of UK inflation?
So we're slightly more optimistic than consensus on UK inflation for half an hour's time. We see headline inflation at 3.7% and core at 3.4%. But much of that is based on the judgment that the spike in airfares that we saw in July will be reversed. And we don't actually expect to see much more disinflationary pressures from this report. So we don't think it will alleviate fears on the MPC that inflation is no longer a problem. And
you think the BOE stays on the sidelines through the rest of the year? Do you think another cut is feasible?
We think that the bank rate will remain on hold at 4% until the end of the year. We don't think there'll be enough hard data to show the committee that inflation concerns are less of an issue. Maybe by the turn of the year, that will become more evident because, for example, you've got VAT on private school fees dropping out of the annual comparison, which will weigh on inflation. But for now, you just have to look at the minutes from the last meeting, Bailey's comments at the Treasury Select Committee to show that there's no hurry to reduce interest rates further at this current point.
And you touched on some of the individual components, whether it's VAT on private schools or airfares. Yeah. What else is making the UK such an outlier when it comes to the inflation story? You're at 2% in Europe, around 3% in the US, and we're stubbornly around 4% here in the UK.
Yeah, we say on a desk that the ECB is probably looking around at its other central banks sighing a relief because it's in a relatively good position. As you say, inflation's near target, the economy is growing relatively well. In the UK, there are specific factors. We had the national living wage rise, that's preventing services inflation from falling more. We had the increase in employer NICs, and we had that big increase in administered prices at the start of the year, such as water charges. All of that has fed into inflation, keeping it higher. But we are optimistic that it will come down next year. Whether it will reach 2%, we probably don't think so. Possibly we've got to wait for 2027 for that.
Let's bring the growth story for the UK then. So with the BOE on hold through the rest of this year, which is your forecast at 4%, what are the risks that does more damage to growth than it does capping or pushing inflation lower?
It's a trade-off, but actually growth so far this year has been relatively good in the UK. We had 0.7% quarter-on-quarter in Q1, 0.3% quarter-on-quarter in Q2, and we're looking for growth of 1.5% over the course of the year.
Are you? 1.5%? So this is not a stagflating UK economy?
No, we don't think so. We're probably more optimistic than some others, and we think the data doesn't necessarily justify all the doom and gloom that's maybe in the media over the UK economy at the moment.
Oh, it's awful. Yeah.
No, of course not.
You have a right to take. Okay, 1.5%. Look, with on the meetings between President Trump and Keir Starmer tomorrow, a lot of deal making. We've been reporting on this with a big focus on AI infrastructure. Some of it's repackaged, re-announced. Some of it's new. Does any of it, do you think, move the dial on UK growth?
I think it's certainly positive, and the focus on AI. AI is a big upside risk to the UK economy. If we manage to implement productivity gains through AI, this is certainly a great thing, and Chancellor Reeves will be looking at it, crossing her fingers, hoping that this does bring about a productivity boom in the UK.
Ellie Henderson, thank you very much indeed. With a brighter look on the UK economy as we lead up, of course, to inflation data out at 7 a.m. UK time. Ellie sees core inflation coming in a little bit below, and headline below the median estimates. We'll watch that for you and break it down for you. The implications, of course, for the BOE and how the deal-making between the US and the UK could actually move the dial on growth with a forecast of 1.5% by the end of this year. Ellie Henderson, Investec Economist, thank you. Now to some other stories making the news this Wednesday, and to the corporate space, where Nestle's chairman, Paul Bulcke, is to step down earlier than planned. That's on investor concerns over his handling of the company's former CEO, Laurent Frixet's undisclosed relationship with a subordinate that led to his dismissal. Bulcke's departure comes amid a decline in Nestle's share price. Vice Chairman Pablo Isla was due to succeed Bulcke next year, takes over as chairman on October the 1st. Isla was the former CEO of Inditex from 2005 to 2011 and has served on Nestle's board since 2018. And drug maker Eli Lilly's obesity pill has been hailed by doctors after trials recorded a weight loss of 11.2% by patients. Doctors at the European Association for the Study of Diabetes say the tablet makes it possible to treat many more patients and is easier to produce. While weight loss targets fell short of rival products, its side effects are comparative to shots available today in the market. And Thyssenkrupp says it's received a takeover offer for its struggling steel unit from India's Jindal Steel. The German firm says it will carefully assess the non-binding offer without disclosing its size. Its steel division has been weighed down by soaring energy bills, rising interest rates and low steel prices. And Bloomberg understands that China has released a Wells Fargo banker it earlier blocked from leaving the country. This comes ahead of Friday's call and potential in-person meeting between US President Trump and Chinese counterpart Xi Jinping. US citizen Mao Chenyue was barred from leaving China after officials there said she was involved in a criminal case that was under investigation without giving details. Coming up, President Trump is in the UK for his second state visit. More on the pomp and circumstance you expect from that state visit. That is next. We're live from Windsor. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, the royal red carpet is being rolled out for President Trump today for his state visit to the UK, the second, of course, for President Trump. He has a strong affinity for Britain, and today he will be hosted by King Charles. The President and First Lady will take part in a traditional carriage procession. For more on the pomp, Bloomberg's UK correspondent and now temporary pomp correspondent, Lizzie Burden, is at Windsor Castle. So today, all about royal tradition then, Lizzie, something of which you also have, I believe, a certain affinity.
I love the pomp, Tom. Every day is a day for pomp. And look, today it is all about that pomp and pageantry. In theory, it should be the low-risk day, although that's a relative term when it comes to President Trump. Of course, this isn't his first state visit. It's an unprecedented second. Barack Obama and George W. Bush didn't get to come back a second time. And this is really what we do best here in the UK. But the risk is that we deploy our ace, the king, without getting anything substantive in return. And you may remember during Donald Trump's first state visit, they'd all just sat down for the state banquet at Buckingham Palace, everybody in their finery, only for an interview to break with the Sun newspaper in which Trump had criticised then Prime Minister Theresa May. Indigestion for all, deeply embarrassing, and there are many potential pitfalls again this time. For example, Tom, you've got many UK officials worried that Trump will confront Starmer on his pledge to recognise Palestine. We have the UN General Assembly meeting in New York coming up next week. There's also the uncomfortable question of Jeffrey Epstein. Starmer just having lost his UK ambassador to Washington, Peter Mandelson, over the deceased, disgraced financier. And Epstein, of course, is the tie that binds Starmer via Mandelson, the king via his brother Prince Andrew, and Donald Trump himself. So not only could there be painful small talk, there is the serious question, which may be posed to Starmer at the joint press conference at the end of this trip. Does he actually think that anyone with links to Epstein is fit for high office?
Yes, and of course, when you think of Epstein, unfortunately, you also have to think about the royal family and the role of Prince Andrew and his friendship, of course, with the late disgraced financier. What role will the extended royal family play? Are all members getting involved in this? You've described them as the ace in the pack. The king is the ace in the pack. What other cards from the royal family is this UK government hoping to play?
Well, the President and the First Lady are going to arrive here in Windsor to be greeted by the King and Queen. As you say, they'll go on a carriage procession around the grounds of Windsor, avoiding any potential protests, I might add. But they'll be with the Prince and Princess of Wales. And we hear that Donald Trump took a shining to Prince William when they met in Paris last year. He said he was very handsome. So they're keen to deploy William on this visit as well. They'll then be having a private lunch. They'll lay a wreath on the tomb of the late Queen Elizabeth II. Of course, Donald Trump, very, very fond of the late Queen. And we know that he loves royal tradition. He's gone from a Saudi oasis to a Dutch palace and now to Windsor Castle. We know the effect that the hand-signed invitation from King Charles III produced on Donald Trump back in February when Starmer delivered it to the White House. We got shunted to the front of the queue when it came to a trade deal. Britain now benefiting from lower tariffs than other US allies. But the point, again, is that this soft power needs to translate into hard leverage for Britain when it comes to trade, when it comes to geopolitics, on the crucial issues of Ukraine and the Middle East as well, because, frankly, this visit couldn't come at a worse time for UK Prime Minister Keir Starmer.
OK, let's see if the royal ace in the pack plays that part. Bloomberg's UK correspondent Lizzie Burden, who you get the sense is really in her element today as that state visit, of course, gets underway. Lizzie, across this story for us throughout this morning. Lizzie, thank you. Now to some other stories making the news this Wednesday. House Republicans have unveiled a stopgap spending bill to keep the US government open past the October the 1st shutdown deadline. The measure would keep agencies operating until November the 21st and provide new funding for security. It needs at least 7 Senate Democrat votes to overcome procedural hurdles, but it doesn't include healthcare policies that Democrats have demanded. Some of Jaguar Land Rover's suppliers in Europe have been forced to pause or scale back production. That's as a cyber attack more than 2 weeks ago is still disrupting production. JLR says its factories will remain closed for at least another week while it continues to deal with the fallout. One of its exhaust suppliers in Germany has put workers on holiday or on short-time work. The ticket-selling platform StubHub has raised $800 million after pricing its IPO in the midpoint of the marketed range. The listing gives StubHub a market value of more than $8.6 billion. The shares are due to begin trading in New York later today. The CEO, Eric Baker, will be on Bloomberg Tech just after 4 p.m. UK time. So stay tuned for that interview. There's plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So it is Fed Day, that decision coming late this evening, of course, UK time, or of course the evening of UK time. The question really is where to focus, because it will be such an intriguing press conference for Jay Powell, given the political pressure he's under. You want to watch the dot plots, you want to watch the guidance as well. Does he confirm the market pricing, Jay Powell? And to what extent will you get dissenters on either side of that debate? So September fully priced, of course, for 25 basis points. Then you get to October, you're almost priced for another 25 basis points in October, and December as well, close to that. So almost 3 25 basis point cuts priced in by the Fed, or by traders, I should say. Will Jay Powell push back on that pricing? And is there a risk of a second wave of inflation if you start that kind of aggressive rate-cutting regime from this Federal Reserve? Let's flip the board and have a look at the UK inflation picture. Talking of inflation, we're not into second wave inflation. We still haven't got rid of the first wave of inflation. The numbers drop in a couple of minutes' time. The opening trade team will be breaking that down for you. Expectations that on a headline basis you remain in line with the July numbers at 3.8%, core at 3.6%. A challenge for the BOE, which many now, in terms of the investors and traders, expect to be on hold through the rest of this year. Let's see if the inflation data out of the UK changes that narrative. Maybe a drop in airfares and possibly what's happening in terms of food prices. That could be a divergent picture. Food prices have risen, airfares could come off from the July highs as well. Let's briefly check in on the tech story of China. Remarkable moves coming through from the HS Tech Index today. Some upgrades coming through. An upgrade on Baidu on its chip activity, what it's building out. The innovation at Baidu, of course, and around chips and AI. That is part of the story. HS Tech then up 4% in the session today. You're almost 4-year highs. These are Chinese companies listed in Hong Kong, of course. Baidu rallying almost 19%, above 18%. Look at that jump for Baidu. SMIC as well, the chip maker, rallying 6% on some of the innovation that's coming through there in terms of the hardware story. Alibaba joining the fray in terms of the upside that's coming through. So just bear in mind that the innovation bets continue around Chinese tech and Chinese AI. So Bloomberg Terminal subscribes and get these, of course, on GTV Go. We've got a number of great guests coming up through the next couple of hours. Opening trade is next, though. This is